Hi, this is Joe Rabil from Rabil Stock Research. For the past 30 years, I've been providing stock research and consulting to institutional money managers. So today I am going to discuss, I am going to handle one of the top 10 influential market events for 2021. And I'm going to cover large cap technology. Generally speaking, I'm going to talk about tech, but I want to focus in on large cap because I think it continues to have a significant impact on the market and influence the market in a significant way. And it really kind of kicked in again the last half of this year. So let's go ahead and get straight into the agenda. And I want to, again, I'm going to focus on the XLK as kind of like the chart that I'm basing this theory on. It's had another big year relative to the market. I'm going to show you that. I also want to talk about the components, not only of the XLK, but I want to look at it. I'm going to look at it from a broader picture standpoint because we know the big stocks in the XLK are, a lot of the big names that everyone knows. But I want to focus in on how these heavyweights, the heavyweights are having, meaning the heaviest weighted stocks in the marketplace. And I'm using the Russell 1000 for this example. And they just continues not to change, and it continues to be heavily weighted towards technology. And then I want to discuss the IWF, which is the Russell Growth versus the Russell Value, the IWD. I think this is also pertinent to this discussion as to why technology has such a big influence over the overall market and how it's causing swings in the relative line, the ratio between the growth and the value. And then I'm going to finish up and go into some of the key component charts, some of the big names. And I also want to look under the hood. And what I mean by that is I want to look at some of the names that maybe aren't on everyone's radar that might be showing signs that there could be a shift taking place that we're going to have to keep an eye on, especially as we turn over into a new year. So, that is how we're going to go about this. Let's go ahead and get into the XLK. So, obviously, looking at the technology sector, it's been a strong performer. I mean, and that dates all the way back to, well, it goes back a long way, even prior to this chart. We can see the relative strength line in black shows that this line relative to the S&P continues to make higher highs and higher lows over time on this weekly chart. But again, we want to focus in on just this year. So I've sort of drawn in a line I started a line right here that shows where it was underperforming through right around the beginning of May, right in here. And this was a period where stocks in basic materials and industrials and financials were really outperforming technology. And this area really wasn't doing a whole lot. What I found to be really interesting during this period, during this phase here, was that the tech stocks continued to correct, but there wasn't big signs of distribution in place. And based on this XLK, we can see that this chart has continued to make higher bottoms every single time it pulls back. This purple line is an 18-week moving average, and it essentially has come down towards this 18-week, and this line has acted as support for every pullback, really dating back to the bear market since it started to get going in the mid part of last year. So this year really kind of kicked into the gear again right around the midpoint, right around May, just before halfway, and has since that time been a very strong performer on a relative basis. And I think has had a pretty strong influence on the market, obviously, because we're seeing the indices basically close to all-time highs for the most part. And I think a lot of that has to do with what's taking place in the technology sector as one, and inside of that, even so, I would say the big cap tech inside of tech, because we can go and look at the trends of these stocks, which I'm going to talk about a little bit later, have been very, very strong. And if there's one stock in the sector that's kind of taking a breather, then the other one's breaking out and moving up. So these are all the types of things that I think are having a pretty strong influence this year. I do want to get into some detail as to the components. And as I mentioned, I'm using the Russell 1000. So instead of just looking at technology, I want to see where technology ranks. And I used May, which is when it was at its low point this year, May 10th, versus where it is today. And so, and the reason why I wanted to show this is I wanted to show why I think this has had such a big influence, because we've had a period where technology, and you can see the sectors lined up here. So we have Apple and Microsoft, and then Google and Facebook, and then NVIDIA down here. And you can start to see there are approximately 9 technology stocks in the top 30 of the market cap for the Russell 1000, about 9. So a little under 30% of the market of the Russell 1000 being influenced by technology, large cap technology. And that was when it was at its low point. Now, if you look at what's taken place since that time, we've actually got, and where we are right now, we've actually got 11 stocks. I'm not going to go through each one, but we've got 11 stocks that are now in the top 30 in technology. And that's essentially saying that even though the market has remained strong, it's not like it's gone exponentially higher. It just hasn't changed. We had about 9 when it was at its low point versus the value. And now that it's back very strong relative to value and really kind of being a leadership group again, we're seeing about 11, more than 30% of the market being influenced by technology stocks. Now, the one critical thing I want to point out here is if we go and look at I don't want to focus on the short term. I want to look at the intermediate term and the long term. And if you go through and look at the components, especially on a long-term basis, both before and after, really has not been much of a change in the technology stocks this year. They went through a pretty serious correction, and that showed up on a lot of the short term. A lot of them turned neutral, a few turned negative during their corrective patterns. But once the bigger trends start to kick in again, we see that the short-term trends actually started to turn positive again. So I guess what I'm trying to show here is that we really haven't seen much of a change in, and I'm doing this on all these stocks, but we've got a lot of technology in here that really hasn't changed the trends. The trends, so if we look at Apple, Microsoft, and Google, all 3 of these are positive, intermediate term and long term. And when this was taking place, Apple's long-term trend was still positive. Yeah, the intermediate term turned neutral. But if you look at Microsoft and Google, they didn't change at all. So I think these are the types of things we have to focus in on, because we're going to see when the market's really ready for something meaningful to the downside. I'm really of the opinion that we're going to see a lot more red in this category or over here in real time where we are right now. The ones that are red right now, we've got healthcare, financial services, another financial services, and then a consumer cyclical. I would think before we start to see any real deterioration in the general market, we should see the intermediate term trend in tech stocks start to show some signs of deterioration, where these might not even turn neutral. We'll actually see red check marks taking place. So these are the types of things we're going to be on the lookout for. I've been waiting to see signs that some of these big names are giving off signs that that they're reversing their intermediate term trends, and we just have not seen that up until this time. So I think we ought to go and take a look at the IWF versus the IWD. So that's the black line down here. Okay, so what I've done is change the ratio. Instead of using the S&P, I'm using the IWD over here. I've got the IWF ratio to IWD. So when this black line is moving up, it means that growth is outperforming value. And when the line is dropping, it means the value is outperforming growth. And again, right about till that May point this year. So here's the starting point for the year. Value was outperforming until about May. And then we started to see some of these big names start to turn the corner, start to kick in again. And since that time, the growth stocks have clearly outperformed the value. And so we're actually back up to the level we were at the peak back last year. So I think this is important to watch. This is something we're going to need to keep an eye on. And one of the big reasons why I believe that is, and it goes back to this theory that I have, which is this line could keep oscillating like it's doing right now between growth and value. But at some point, technology, and especially looking at the IWF or the XLK, is going to come here and break this 18-week. It's going to break its trend line that it has in place, and we're going to see real price deterioration here. We have not seen price deterioration in the IWF or the XLK. It has come down to support and turn back up. It continues to make higher lows. And until this changes, you have to be under the assumption that any counter trend move on this ratio is only going to be intermittent. Because and I've gone back and looked at this historically speaking, if we're going to see a switch where we're talking about value truly outperforming for a significant period of time, then I think you're going to need to see a trend break in this chart, this IWF, and correspondingly in the XLK at the same time. Because if the XLK goes down, there's a very, very high probability that this chart is going down as well. Based on what I showed you on the weightings, 30% of the market is certainly in the growth area. In the growth area, it's probably a little bit higher in technology. So I wanted to show you the bare bones by just looking at the Russell 1000 Core Index. So anyway, these are all, I think, important things to keep an eye on as we flip over into a new year. As far as 2021 goes, I think this is the proof in the pudding right here. We had a down period for technology and growth. But since May, this has been very, very strong, and we're back to new highs. We're actually up for the year in technology. We're up for the year in growth. And obviously that tech is having a big influence on it. I want to finish off by spending a few minutes on some individual stocks inside the technology area that I think is pretty important, especially as we flip over into the new year, but certainly the impact that they've had this year. We're going to start with Apple, obviously a big name out there. It's the biggest component in the market. It was back in May. It is again now. There was a period there where Microsoft actually took over, but now Apple is back to the leader again in terms of size. And, one of the things, just looking at the monthly chart, I want to point out how important the ADX continues to be, making strong peaks with each new high. And every time the stock makes a big, strong new peak to the upside, we get confirmation on an ADX basis. So that I think is fairly important. Now, I think before the one thing I want to point out is that I don't know that this is going to be a leading indicator for a top. I think we'll probably see signs on a price basis before we see signs on a ADX basis, meaning the ADX, really falling down and not confirming. But we could see DI, and one of the things that I'd be on the lookout for on this monthly chart is a sign of real selling. We can see the red DI has a peak here and another one here. Something we definitely have to watch. If we see real selling take place in this, that could be something incredibly important that could have a pretty big influence on how this trades as we flip over into the new year. If we look at Microsoft, I mean, I've been telling this to people that I've been talking to for a while now. I think this is one of the greatest trends that we've seen in a long time. I mean, ADX on the monthly chart even refuses to come down under 50. It's very rare for the monthly chart to make peaks and valleys above the 50 level, but this has been doing it since 2019. So incredibly powerful trend. We did see that happen in the late 1990s. But just in terms of what this has done and how this has continued to put on new mileage, I think it's important. Now, I do want to make mention of the fact that we've gotten stretched away on these stocks away from their 18-month moving averages, and we are getting a little extended from that standpoint. So as we flip over into the new year, yeah, I think we should be a little bit more cautious about these in terms of what they're going to represent. But for now, the trends are very strong, and it just doesn't look like there's a lot of distribution in these yet. Google's another one that I think is showing a lot of strength. Again, look at the ADX lines, both on the monthly and the weekly, continuing to confirm the trends. The first thing we're going to see is a break of the 18-week, and that'll suggest that we're going into a more corrective pattern. We did not have one of these this entire year. I mean, this is the start of the year for Google. It's been in an uptrend. It never really broke the 18-week line. Until we see that, these intermediate term trends are still to the upside. Facebook did go through a pretty good correction, but now it's finding support at the 18 months. So we're at a very critical point for this stock. It's at the 300 level, and it might channel sideways for a little bit, but the reaction here is going to have a pretty big impact, I think, on how this plays out. Because if we break 300, that actually could have a pretty big influence on technology in general if this does not hold 300. So something key to keep an eye on. NVIDIA I wanted to mention just because it's been such a stellar performer, one of the best stocks of the year, and has just been a blowout player and represents the strongest area inside of tech, which is semiconductors. Semiconductors have been phenomenal. So we have to respect that. But again, look at how extended this has gotten from its 18-month line. So we have to be a little leery here as we turn over into a new year. Notice the size of the volatility growing. So anyway, those are important factors. And then I just want to touch on these very quickly. Look at Net. Look at Unity Software. Look at Twitter. Look at YNDX, Yandex. Look at the distribution that's taken place in these stocks. These are pretty violent selling, and I think something we have to be worried about as technology, in terms of technology, as we move forward. That's it for this segment. I hope you enjoyed it. Got to talk a lot about technology, how big of an influence it had on 2021, and how big of an influence it could have on the new year. Something we're going to have to watch in the first quarter. So you can contact me through LinkedIn or find my research on rabilstockresearch.com. In addition, if you'd like to learn more about trend, MACD, and ADX in multiple timeframes, I have a YouTube channel and a book called Invest Like a Pro, which delves into this subject. Have a great trading day, and I'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.